Welcome back, everyone. The global markets sent some really mixed signals this week. So we're going to dive in and decode what's going on, get a handle on the powerful forces at play, and figure out what it all means for the weeks ahead.
Okay, so let's just jump right in with the big question on everyone's mind. What is the true pulse of the global markets right now? What are they really telling us?
All right, first up, let's take a look at the major stock markets. And let me tell you, from New York to Tokyo, they were all singing very different tunes this week. It really created a deeply uneven picture across the globe.
And wow, it really was a tale of three different regions. In the United States, you saw a lot of resilience. Yeah, there was volatility, but a strong jobs market really helped prop things up. Europe, on the other hand, well, it was kind of bogged down by uncertainty over what its central bank is going to do next. And Asia, a fascinating split. China's markets were really struggling with a property slowdown, while Japan's were actually surging, all thanks to a completely different economic game plan.
So, the big question is why? Why are these regions on such different paths? Well, to understand that, we've got to go behind the scenes, peek inside the global economy's engine room, the world's central banks.
So first, just a quick refresher on what monetary policy actually is. You can basically think of it as the playbook that central banks use. It's the set of tools they have to either hit the gas on their national economies or, gently tap the brakes.
In the U.S., the Federal Reserve is walking a very, very fine line. It's a real tightrope act. Their number one priority is taming inflation, for sure. But they're trying to do it with enough finesse that they don't accidentally push the whole economy into a deep recession.
Now, over in Europe, the key word for the European Central Bank is caution, or prudence. They are being super careful, trying to decide if they need to raise rates again. And why? Well, because even though inflation is slowing down, it's still not quite where they want it to be. And this brings us to the complete contrast over in Japan, where the central bank is just on a totally different wavelength. They are all in on stimulating the economy, keeping those interest rates low to try and fuel as much growth as possible. Now, these different strategies from the big central banks, they don't just happen in a vacuum, right? They create these powerful ripple effects that spread out across the globe. So let's track how those waves hit the currency and commodity markets this week. You could see this divergence crystal clear in the currency markets. The US dollar, it held strong. Investors see it as a pretty stable bet right now. But the euro, it really felt that downward pressure. And that's a direct reflection of all the uncertainty swirling around Europe's economic growth prospects. Shifting gears to energy, it was a pretty tense week for oil. Prices got pushed higher by a combination of things: geopolitical tensions heating up, and, importantly, some key production cuts from OPEC+, the big group of oil-exporting nations. The story for natural gas, though, was much, much calmer. Prices were actually pretty stable. And a huge reason for that is that Europe has done a really good job keeping its storage reserves well stocked, and that helps absorb any sudden shocks. And you know how this goes. Whenever the markets get choppy, investors start looking for safety. And this week, they turned to gold. It really lived up to its reputation as a safe haven, with demand picking up as people looked for a secure place to park their money.
So, after a week like that, with all these mixed signals, where do we even look for clues about what might happen next? Well, there are three key signposts to watch for on the road ahead.
It really boils down to three main areas. First, you've got to watch the economic data like a hawk. Those inflation and employment numbers are going to be crucial. Second, listen to what the central banks are saying. I mean, every single word from the Fed or the ECB can move markets. And finally, you have to keep an eye on geopolitics, which honestly remains the biggest wild card of all.
Okay, we have covered a lot of ground, from Wall Street to the Bank of Japan, from the dollar to gold. So let's pull all of these threads together now and really look at the big picture takeaway from this week.
So what's the one thing to remember from all this? I think it's that we're in a market that's really defined by two opposing forces. On one hand, deep, deep uncertainty, but on the other, real opportunity for anyone who can correctly read the signals.
So, how do you navigate a landscape like this one? Well, in this kind of environment, two classic strategies become more vital than ever. First, making sure your investments are diversified, and second, just maintaining a prudent, cautious approach.
And that leaves us with one final thought to carry with us into next week. In a global landscape that just seems to be defined by this persistent uncertainty, is being cautious the only way to win? Or is there a moment when taking bold action actually becomes the most prudent strategy of all? We'll see what the markets tell us next week. Thanks for joining me.